All right, welcome to the Explainer. So today we're tackling a really fascinating puzzle coming out of China's latest economic data. It's one of those situations where, depending on who you ask, or even which numbers you happen to look at, you get two completely different, almost opposite stories. So let's just get right to the heart of it. The big question is China's economy booming or is it busting? Is it on the road to recovery or is it staring down a pretty serious slowdown? Because honestly, the signals are so conflicted, it's almost like you're looking at two totally different economies operating at the exact same time. And I mean, look at this. This slide lays out the divide perfectly. On one side, you have the official government line, which describes the economy as stable with progress. That's 稳中有进. But then you've got market analysts, folks from places like Goldman Sachs, calling it an across-the-board slowdown, or 官面放缓. I mean, how can this same set of data lead to such polar opposite conclusions? How is that even possible? All right, to figure this out, we're going to have to do a little detective work. Let's dig into the hard evidence and see what the numbers are actually saying. And really, the best way to get our heads around this is to think of it as a tale of two economies. Seriously, there's one part of China's economy that's looking incredibly strong, resilient, but at the same time, there's another massive part that seems to be completely stuck in the really serious downturn. Okay, so let's break that down. We're going to look at 4 key data points that really capture this striking contrast. First up, the good news. And it's really good news. High-tech manufacturing is just on fire. It's up a massive 9.3% year-on-year. We're talking about things like industrial robots, 3D printing, new energy vehicles, all that good stuff. This is supposed to be the new engine of China's economy. And man, it is firing on all cylinders. But then, boom, we hit our first wall. Retail sales growth, it came in at just 3.7%. That's a new low for the year and way below what anyone was expecting. This is a huge red flag. It tells you that the Chinese consumer, the person who's supposed to be the backbone of domestic demand, is getting nervous and pulling back. Okay, now let's swing back to the positive side again. Exports. They surged by 8.0%, absolutely blowing past the forecasts. So what does this tell us? It says that global demand for Chinese-made goods is still incredibly strong. China's spot in the global supply chain? It looks as solid as ever. This is a huge bright spot. And then we get to the big one, the biggest negative number of them all, real estate investment. It didn't just slow down, it plummeted, down 12%. This isn't just a dip, folks. This is a sector in a deep, prolonged crisis. And it's acting like an anchor, dragging the whole domestic economy down with it. And this chart, this really brings the whole puzzle into focus, doesn't it? On one hand, you've got this booming production side, the high-tech manufacturing, those strong exports. And on the other, you have this crisis unfolding in the domestic economy, weak consumer spending, and that collapsing property sector. This right here, this great divergence, this is the source of all the confusion. So, okay, the data is all over the place. How on earth do you build a coherent story out of that? Well, it turns out that's exactly what's happening. Different groups are looking at these exact same numbers and telling two completely different stories. Let's break down those two main narratives. First, let's look at the official story coming out of Beijing. From their perspective, this crazy divergence isn't a crisis at all. No, they see it as a necessary part of a grand strategic transformation of the entire economy. And the key to understanding their point of view is this phrase: new quality productive forces. This is basically the buzzword for Beijing's big plan. They want to shift the economy away from its old reliance on things like real estate and infrastructure and towards these advanced high-tech sectors like AI and green energy. So from their perspective, it's pretty simple. That boom we saw in high-tech, that's proof the plan is working. And the pain in the property sector, well, they see that as a necessary, maybe even a planned part of the process. Like ripping off a Band-Aid to wean the economy off an old, unsustainable model. They'd argue that, yeah, it's a difficult transition, but it's all about building a more resilient foundation for the future. All right, now let's flip the coin and look at the market's view. And as you can probably guess, they're painting a very different picture. International banks, analysts, they look at the exact same data and they don't see a healthy transformation. They see a dangerous imbalance. And this quote from Goldman Sachs really nails the market's diagnosis. It's all about a reluctance to spend amid weak confidence. So the problem isn't that it's too expensive to borrow money. The problem is that people are just worried. They don't feel confident. So what do? They save their money, they don't spend it. So what's driving this crisis of confidence? Well, almost every analyst points to the same thing: the property crisis. I mean, look at this stat from UBS. In major cities, it would now take nearly 21 months just to sell off the existing inventory of empty apartments. And you have to remember, for most Chinese households, their property is their main source of wealth. So when that collapses, it creates this huge negative wealth effect that just crushes confidence. And that stops not just consumer spending, but business investment too. But okay, here's where it gets really weird. A fascinating little twist. Even with all these signs of stress in the real economy, Morgan Stanley points out that foreign investors are actually pouring money back into Chinese stocks. Why? Well, they see cheap prices and they're betting on the long-term potential. It creates this really strange disconnect between what's happening on the ground versus what's happening in the financial markets. So, okay, we've got two completely different stories being told, the official story and the market story. But, and this is really important, underneath all that disagreement, almost every market observer actually agrees on what the fundamental problems are. And this is where things start to get a little clearer. They might disagree on the story, but there's a surprisingly strong consensus on the diagnosis. Let's break down what pretty much everyone outside of that official narrative agrees on. This table basically sums up the whole market consensus. Point 1, the core problem, a severe lack of domestic demand. People just aren't spending or investing. Point 2, the epicenter of that problem, the ongoing property crisis, no question. Point 3, the outlook, well, the risks are piling up for the second half of the year, which leads to the big conclusion, the solution. Whatever they're doing now, it isn't enough. More forceful government stimulus is needed to break this cycle and get confidence back. That's pretty much the unified view from the market. So let's just recap the whole story we've unpacked here. It starts with step 1, Beijing's big plan for a structural shift to these new quality productive forces. But that plan is run smack into step 2, a severe collapse in demand and confidence, all thanks to the property crisis. And that brings us right here to step 3, a really critical decision point for Beijing. And you know, the stakes here could not be higher. The choice that Beijing makes over the next few months isn't just going to define its own economic future. It's going to send major ripple effects across the entire globe. Believe me, the world is watching very, very closely. And that leaves us with the final crucial question. What will China's leaders do? Will they choose a short-term fix, some kind of massive stimulus to boost confidence right now, even if it means putting their long-term vision on the back burner? Or will they hold the course, stick with their long-term transformation plan, and risk a much deeper, more painful economic slowdown in the process? That right there, that is the choice at the heart of China's economic crossroad.